Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Woo! Guys, look at what happened on the charts. We got ourselves a breakaway gap, guys. It's a breakaway gap. You guys see all previous all-time high around the 565 level. We struggled around that 563.5 to 565 level for a while. Since July, we just couldn't break out that sell zone. But today, guys, we gapped up. However, we got a doji candle, guys. This is new all-time highs. I know a lot of bears are probably looking to short right now. But bears, if you're watching, you got to be tactical. You got to be strategic about this because there's no guarantee that we are going to drop. Breakaway gaps are bullish, guys. You go on Google, type in bullish breakaway gaps, put in the image, and you're going to see a bunch of examples of bullish breakaway gaps, okay? Bullish breakaway gaps. So you see an example here on a bull flag, okay? You see an example here on, what's that, a descending triangle. But breakaway gaps, they can happen in any pattern. Flags, bear flags, channels, wedges. They can happen on anything. But the idea is that once we get the structure, they gap above it. A bullish one. If it's a bearish one, they gap below it, guys. We gapped above it. Okay? Is this guaranteed? Is this guaranteed that we are going to see more upside? It is a possibility, and it is a bullish start to go hit that 578 fib level. That's my 1.236 fib level. But it's not guaranteed. There is no 100% in the stock market. That's why it's on us to know the levels and setups beforehand so we can be ready to trade it in real time. Makes sense? So, yeah, we did get the gap up, but we got the doji. The doji, which represents, what does dojis represent? It represents indecisiveness, choppiness, all right? And how do we trade chops? We identify the range and we watch the break of the range. That's how it is, guys. And the range of this doji candle is down to 568 up to 572.88. Okay, so anything in between that range is all noise. SPY could be consolidating. It did gap up, okay, because yesterday it closed at 561.4. Today it closed at 570.98. That's a pretty big gap up for the SPY, okay? So, bottom line, we got a bullish breakaway gap. For it to stay bullish, it must stay above 565 previous all-time highs on any pullback, because we can get pullbacks, okay? If it wants to pull back and confirm 565 as the new buy zone, or maybe even fill the gap, which is around 563.8ish, totally fine. But if it does test it as support, it needs to defend, and we trust bounces when it can recapture lost levels. Okay, so as of right now, I have support at 570 and 568, which was today's low, the bottom range of the doji. If those levels break down, it's a good sign that we are going to backtest 565 and maybe even fill the gap at 563.8. But if we're talking about a deeper pullback, if we're talking about a false breakout to put in a top, 565 and 563.8, the gap must fail as support to give us that false breakout setup. Okay? Because remember, stop loss hunting is a real thing. For all we know, the market makers since July have been setting up a bunch of stop losses in that zone. Okay? And if that's the case, and they want to trick everyone out, like I said, need to break down those levels, 565 and 563.8. If it does, guys, this was a hell of a false breakout. And when we get a hell of a false breakout like that, that is when Uncle is comfortable calling a top. All right? But as long as above 568, and we clear those next resistance level. I have one at 571 and 572.88. If those levels clear, guys, we are heading up high at 574, 576, in the big Fibonacci extension level at 578. Never say never. Never say never. I know the Bollinger Band is starting to get overextended here at the top of the Bollinger Band. But hey, let me tell you something. The price action is gonna do what it wants, and it's all on us as sheeps to follow it. Bah! Now, the fun's not over yet. That's the plan for SPY. But guess what? Triple Q also had a bullish breakaway gap. Let me explain, guys. got this downtrend line here. The downtrend line that connects July 10th high with August 22nd high. And we had a battle here. We also had a third touch on September 13th. We had a battle there, but never quite got an official breakout. And look at that. We gapped above it. That's a breakaway gap. And we closed above the 482 level, which is a fib level. As long as above 482, I am bullish on triple Q. I'm bullish on triple Q, clearing the next resistant levels. I have one at 44 and 46.25. That held today. That's a fib level, 76 fib level. But if it clears, guys, more upside is incoming. We'll possibly go to 500, 502, and 503.4. Those would be my upside targets. Okay, I know it's a long ways away, so let me give you closer levels. If we clear 484 and 46.2, if we clear those levels, okay, 488, 490 in the gap fill around 496.5 ish would be in play. Okay, 490, 492, 490. 3.5, 495, and 496.5. Okay, please add those levels to your chart. You can slow the video down a little bit if Uncle's talking too fast. Now, if we want to get bearish, guys, like I said, we need the false breakout setup. We did hit that fib level at 78.6, fib level 486.2. Okay, got some rejection there. If that is a true rejection, it needs to break down support. Okay, break down 482, break down 480. Then I would favor we get a pullback down to 478.5, 477 or lower. Don't call a top, guys. Guys, don't call a top unless the price action tells us to. And when the price action tells us to call a top, it usually comes in the form of a false breakout setup. False breakout, can we clear a level and then we break it back down, or we gap back below it? Gap and crap type of thing, okay, guys? NVDA, it gapped up a good amount as well. Yesterday it closed at 113.3. Today it closed at 117.87. Had some rejection, very close to my 120 level, okay? Didn't quite clear my 118 level neither. It was flirting with it to try, but didn't quite do it at the end of the day. Plan is still the same. 118 and 120 must clear once and for all. It's been battling, but if it finally clears those levels, I'd be bullish up to 121.8, 125, and maybe we go hit this downtrend line around 127-ish for a third time, okay? If we're going to get bearish, once again, I need to see 116 fail. We did get a breakdown of 116, but then we gapped and recaptured it, okay? This is a false breakdown setup that's bullish. So for this to be a dead cat bounce or a gap and crap setup, 116 must fail again to trigger puts and put those downside targets in play. Tesla, holy moly, donut shop. That 226.5 level held like a beast. It was the 50% fib level. Today it led to a very nice gap up where it opened around 234. It cleared my resistance level at 235 and my fib level at 237 and hit 244-ish. Amazing. Amazing. All right. So next resistance is at 244, guys. If 244 clears, guess what? More upside is possible. But Uncle, the RSI, it's overbought. Nothing to do with it. We follow the price action, and if 244 clears, then guess what? The RSI is going to do what the price action says. So why don't we? Okay? 244 clears. We are headed up high. 246, 248, 250, 252 will all be in play. If this is a rejection, then 242 and 240 must fail to backtest 237 because that is a critical fib level. But if that level fails, because we did clear it today, if that level fails, that will be a hell of a false breakout setup. And I will call that a possible top is in. Because like I said, if we're going to call tops, then let's put the odds in our favor. Because tops usually come in the form of false breakouts. If we do not get a false breakout setup, I don't recommend calling a top. Does that make sense, guys? Let's end this with IWM as far as the charts go. It's not gonna be over. We're gonna go look at the dark pool and the option flow after. But let's look at the, IWM. Interesting here. Gapped up, treated my fib level. I had a fib level around 221.8-ish, 222 zone. Treated it like support. I mean, it did get a little bit washed below it a little bit, but overall did not break it down. We closed above it. Good stuff. 224.5 is the next critical resistance level, and it was a sell zone too. A lot of selling pressure there. But if it can clear, turn that sell zone into a buy zone, and guess what? We're bullish. 226, 228, and 230 plus would all be in play. Do not look to short unless the critical level that we clear today is lost tomorrow. That would mean 221.8 to the 222 zone must fail as support. And if it does, that is when we look to get bearish. Bah! Sheep style, baby. Let's take a look at the dark pool levels. 570.82, 570.83. All in all, that's over $4 billion in premium. 570.8. And what we got a lower one here. 5.7 bill at 561.32. 561.32. Holy moly, donut shop. There's a lot of the big money players are pouring money into the market. This is a good sign, guys. That volatility is coming. Triple Q, we got anything? Triple Q, we got anything? We got a few, 43.3, 43.4 area. And then there was 471.38, guys. We want to pay attention to these levels because this is where the big monies are getting in. It is a 24-hour delay, but it helps give us an idea of where big money is getting active. Okay, they tend to set the range. They're the big money players, guys. 243.92, 64% of activity came from there, but it was only $42 million. That's pretty low if you ask me. NVDA, 117.87, very close to my 118 level. 939.9 million. That's almost $1 billion, and for a stock, that is very, very good. That's a very good sign that volatility is incoming. IWM 223.94, very close to my 224 level. We had over 285 million in premium there. That's where big money's getting active, guys. Add those levels to your charts. Let's see, 100K premiums or above. Oh man, all those people that have been buying puts, they got spanked so hard. I'm telling you guys, the market makers, they're not gonna want us to win. And you look at that. I'm looking at the most aggressive plays, guys. $15.1 million being bought for puts compared to $1.6 million going in to buy puts. You can look at it like there's a lot of people buying puts, but there's also a lot of people selling to them. Holy moly, don't shop. But look, what's today's date? September 19th. Look at all these puts. September 20th, September 20th. All expiring tomorrow. What does this even mean? What does this even mean? Are they expecting a drop tomorrow? A gap down? Because it's not that out the money. They entered around 570.7. I mean, if they would have added some time to it, I think it would be a good idea. Look at this one. September 30th, 565 strike price. This I like. This is reasonable. This is reasonable. I mean, they didn't really get a setup to enter puts, but hey, if you're going to enter puts, might as well try to enter at all-time highs. I think it's a bad idea, but hey, they still at least got time on it. This person definitely has time. November 15th. Now look at these calls. Are these people catching 4 more? What? 574 strike price for September 19th. This one, 660 strike price for April 17th. Okay. Wow. But you guys see the lopsidedness. So, I mean, even with 15.1 mil going to puts, these could be hedges. And a lot of them are expiring tomorrow. And they entered around the end of the day, guys. 3:50 p.m., 3:51 p.m. They entered around the end of the day. So are they expecting a big gap down tomorrow? We shall see. This person didn't enter towards the end of the day. Okay. We shall see. It's very lopsided, right? It's very lopsided. Y'all see with your own eyes. Triple Q. Okay, so Triple Q is bullish. $6.4 million going into calls compared to $3.4 million going into puts. Let's take a look at the context here. So we got 510 strike price for October 25th. Okay, so they got time. This is expiring tomorrow, September 20th for the calls, expiring tomorrow. We're seeing a few expiring tomorrow and a few calls expired today. So I don't really take it too serious when I see something like that. But this one, 490 strike price for October 11th, 2.2 million in premium. So I ask you guys, if we can see these orders, you know darn well the market makers can see these orders. So if they want to cause maximum pain, you know what I mean? You take a look. What do you think they're going to do? But look at that. They enter around 44.75. That's a doozy. But we're still seeing a good amount of puts coming in too. If I filter for bigger money, like maybe 500K premiums or above. See, you get a little bit of difference in number, but it's still overall bullish when you put 500K premiums or above. Okay, y'all see that? So remember, Don't just look at it as somebody's buying calls. Somebody's also selling calls. If someone's selling calls, they're bullish. I mean, they're bearish. So we got to combine this with the price action. I can't stress this enough. Bearish. 1 million, 1 million, 1 million. Oh my goodness, November 15th. Wow. Very, very bearish. So we got to look at it like, where did they enter? They entered around 223.19, 20.22, 0.73. They entered around there. They got time on it. Yeah. They're probably down on it right now, guys. So if I was a market maker and I want to cause pain, I would probably be bullish on it. That's what I would think. But hey, maybe these people know something we don't know. Maybe they're hedging. Gotta combine it with the price action to get the better story. Tesla's bullish. Very bullish. September 20th. I don't count those. October 18th. A lot of these are expired tomorrow, guys. So they probably, because these were bought in the morning, they probably made money on it already. This they bought at the end of the day. So y'all tell me, like, they bought this at 3:54 p.m. towards the end of the day for expiration tomorrow. So either this is a retail trader with a lot of money, or because guys, keep in mind, these are just people with a lot of money. Okay, it's no guarantee that these people that are buying are big money players that knows anybody or well connected. You know, it's just showing what's going on. That's it. I wish it could give us more context. Did I get everything? I think I got everything. All right. Thank you guys so much for watching. I really appreciate this so much. I hope you guys found value in today's video. Remember, trade unbiasedly. The market makers are out to get us. It's not a paranoia thing. It's just a fact. Look up the composite man. Look up about the composite man, and you'll understand how the market moves. You'll understand why I mention the market makers a lot. Okay, look up the composite man, and a lot of the things that Uncle Charles talks about, a lot of my approach, my reasoning behind it will make a little bit more sense, hopefully a lot more sense for you guys. Okay, other than that, you guys have a great rest of your evening. Peace.